Business confidence has veered into negative territory for the first time in a year due to an uncertain economic outlook. Joining us live is NAB Chief Economist Oster. Alan, good to see you this morning. So that all sounds quite worrying, although perhaps not that unexpected. Where do you think this leads?
Well, what's happening is that you've got business confidence that's sort of gone negative, but business outcomes are still quite positive. So if you're looking at the survey, what it's saying is the economy is still doing well, but people are worried about where we're going. And we look at forward orders, which is also doing okay, but it's shrinking. And so therefore, I think it's just a combination of as the interest rate effects flow through to the consumer and the world economy looks pretty weak next year, business is not that optimistic that things are going to continue.
Okay, so where does all that trend, or where does that lead towards, let's say, over the next 12 months, Alan?
Well, it says that the economy is going to slow a lot. So we're talking about an economy that's currently growing 2.5% during the course of this year to slow to something around 1%, maybe a bit lower, a little bit an increase in unemployment towards the end of next year. But broadly, compared to what we're seeing offshore, this is a pretty good outcome. And we expect to see inflation come down a little bit, but still stay elevated, well and truly above where the Reserve Bank wants it. So my sort of bottom line would be I'd expect the Reserve Bank probably to increase rates a couple more times early in the new year, and then they'll sit and watch to see just how bad the economy slows.
So where do you think Philip Lowe will max it out at?
Well, we think he'll probably be about 3.6. He's currently 3.1. And then early in 2024, I think they might start cutting it back to more neutral territory, which is around 2.5, 2.75, something like that.
Do you think, given those numbers that you've just spoken about, are you any more or less inclined to bring up the recession word?
I still think it's probably 60-40 that we don't have recession. You can't say it won't happen because, outside of COVID and the GFC, the global economy is it's the worst since 1993. So that's a really big negative headwind. And we've got these interest rates that are going up. People are paying it. Some people are moving off fixed loans. And so it's really going to depend on how the consumer behaves. And a lot of them will probably feel nervous and start trying to save a bit more, and that will slow the economy. But I think at this stage it's sort of line ball, but I think we're much better than most of us.
40% is still quite a high number when you think of a recession risk, isn't it? So, it's not like it's 10 or 20.
Yeah. No. It's a serious risk. And I think, the Reserve Bank's been out there and they talk about trying to keep the yacht on an even keel. I don't be like we're seeing in some of the other countries around the world where they're just basically whacking up interest rates until such time as the economy falls over. And, we're talking about serious recessions in the US, the UK, Europe. And New Zealand.
No, that's a good point. Because usually when the US sneezes, we catch a cold, right? So, we've tended to track towards the numbers that they are seeing, although slightly lower. So, if the US is tracking towards a recession, wouldn't that mean that we would follow a similar path?
Not necessarily, because we're not following the similar path, particularly in terms of interest rates. And our economy, as we saw in the national accounts not that long ago, in the third quarter, was still growing quite well, whereas theirs has sort of either been negative, or at least the domestic part of their economy has been negative all year. So we're coming from a much better start point. But I think it's a realistic assumption that if you're in retail, wholesale, and maybe a minor, you're not going to have as good a year next year as what you're having this year, and that's really reflecting.
Okay, and do you expect how much of a help do you think that these potential changes in the energy market from the federal government will have on the economy?
Well, I think Treasury's probably right that it'll take about 0.5% off inflation. But, you've got to remember that it hasn't got through Parliament yet, so let's wait and see. But it's not really going to fundamentally change the outlook, but it might help a little bit.
Okay. Would it affect business confidence in terms of investment, you think, from bigger companies?
I suspect not that much. because ultimately, what they were going to do in terms of gas and big mining projects, they would have done before. The numbers were sufficiently attractive before you've had the recent surge.
Yeah.
So these are long-term projects. So they're not going to be assuming coal prices stay at $350 a tonne
Sure.
for the next 5 years. So
Interesting
no,
point.
I don't see a big impact.
All right, Alan, good to have you with us this morning. Thank you so much. We'll talk to you again soon.